streaming now.
I want you to sell those 3 billion shares that we have in... Oh! Hey! It's YouTube. All right, so we're just on YouTube. We're about to launch Facebook.
So
I'm going to drag this out.
Elections are over, so you can't even say hi to Russia anymore.
Hey.
They're not watching us. It's because elections are done.
You know, the weird thing is I went onto Facebook right before this, and there was a sign on there that said elections are tomorrow.
Oh, that was Russia.
This was... Oh, they're trying to trick Russia by telling them to...
No, Russia's tricking you to not vote.
To go vote on Thursday. All right. All right, Facebook. 5, 4, 3, 2. Hello, and welcome back to another episode of Finance Agents Live. This is episode number 66.
Just one more 6, and then it'd be...
Whoa, no. Just 66. And today we're going to be answering your burning questions about real estate. All right, so last week we had a very fun show. I think one of the funnest shows we've had. One of the shows with the most fun. What do you think?
Most fun.
I don't know. I'd say maybe the goats.
Was it funner?
The goats was pretty good.
The goats or a bunch of people in weird costumes. Yeah, I mean, they're both good, right? So I liked them both. Last week was a lot of fun. If you haven't seen it, go check it out. It's episode 65 where we talk about the launch of our new website, WeMakeCrazyLoans.com. Everybody's in costume, and we go over the kind of loans we're doing, our real estate loans. Now, continuing that theme, we are signing up a lot of brokers.
Not in costume.
I mean, they can wear whatever they want, right? And they're coming in every day. And we get a lot of the same questions over and over again. So we thought today would be a good day to answer your top 10 real estate questions right now. All right, so I'm Tim MC. This is Rhoda P. Let's hit it. I think I was supposed to do the first one, but how about you take it since I did that amazing launch?
How quickly can you fund my loan?
Okay, great question. Everybody wants to know how quickly can we get a loan for the client, especially if you're an established broker and your client just got turned down after a 2-month going through the ringer with some other lender. We see it happen all the time. They've got a deadline. It's already passed. You're bringing the full package to us and you say, hey, it's Wednesday. This client needs to fund by Friday or he's losing his deposit. How quickly can you fund my loan? All right, there's a lot of different answers to that question. If you bring us a full package, that means you have clean title, you already have a recent appraisal that we can use to underwrite and then transfer it into our name, and everything's clean, we can fund a deal in as little as 3 days. When I say 3 days, we need 3 whole business days. So if it's Wednesday, Friday, that's too soon, but nobody on this planet is going to fund it Wednesday to Friday, so...
Planet's big. That's big talk.
Yeah, I'm saying it. Not that loan.
Wow.
Believe me, if it's coming to us, it's not getting funded by Friday by anybody else. But 3 days is fast. Now, I see more frequently loans happening in about 6 to 7 business days. I see that happen a lot. If you come in and there is no appraisal, then it really is up to how long it takes for the appraisal to come in. If you don't have title, then we just cross our fingers and hope that title is clean. But on a residential property, sometimes you can get appraisal within a week, and title only takes a couple days. So even if you have to order that stuff, we can do a loan within about a 2-week period. More frequently, if you got to order appraisal and title, you're looking at about 3 weeks. That tends to be what it is if it's a commercial appraisal. It could be even longer. Commercial appraisals tend to take longer. Anything to add to that, Rhodes?
Yeah, there will be bonus questions, so you may get 10 if you're counting. For the appraisal, can you pay a rush fee on that and get it faster, or week is the fastest?
You know what? Our default is that we always do appraisals on a rush. We use a national appraisal management company, and we always order the appraisal with a rush. That's an extra fee to the client. It's $250, and it might shave a week off the appraisal time. So you can't get it any faster than we already order it. Now, if you come to me and you already have an appraiser that appraised the property once in the past, and you want to use them again, sometimes we will use them, sometimes we won't. They've got to be a licensed appraiser. We need to be able to, there's a little bit of background checking that we will do, but we can do that, and that can also accelerate the appraisal timeline because they may already know the property. They just update an old appraiser. So whatever we got to do to make it happen faster, we're on your side. We want it to happen faster than you want it to happen, probably because we love getting deals done quick. Is that good?
Queen. Yeah, that's great.
All right, awesome. Moving on. Rhoda, what is your maximum LTV? How much money can I get for this property? We hit the get that one all the time.
Yeah, we do. And like
Don't tell me it depends.
Answer, yeah, I was just going to say, like the answer to most of these, it's going to say it depends on the property type. There's a big difference between residential and commercial. So we lend differently on those different property types. Residential is up to 60-65% LTV, and for a commercial, it's 50-55% LTV. I give a little range because it depends on the location, borrower's credit, but those will be the max, and that's a good general rule.
Now, you got to remember with us, that's talking about the maximum LTV, but we see some hairy, weird deals, I'll be honest. So the weirder or the harder the deal is, we're going to dial down the LTV, right? You've heard us talk about the goat farm. You will remember that was a 17% loan to value, so that was pretty out there. We had another $3 million property in a town with only 2,200 inhabitants. That's a residential property, could normally go up to 65%, but because it was so rural, it got down to 37%. Right. So that is our lever. We can deal with anything as long as we can dial down the level, the LTV to where we're comfortable with it. All right, what's next?
What do you need for a new loan submission?
Well, it depends on what you're trying to do.
Depends.
It depends on what you're expecting in that new loan submission. So if you just want to get an initial answer, does this look like a deal that you can do? Generally, we're going to need an application. It doesn't have to be our application. If you have somebody else's app, like you're taking deals somewhere else, they got turned down, you're looking for a home.
You don't need to do that, though. You found your home.
Well,
you don't need
look,
to go
we only
anyplace else.
We want the weird deals, right? If you got the big commercial conforming, don't even bother. Send it to your A-paper lender. That's not us. But when your A-paper lender kicks it out, gives you a sneer and says, this guy's got a 500 FICO, ding, you should be hearing a bell and send it to us. Take that app, and if you have, what we really want to see is an app and pictures. Between an app and pictures, we can tell you pretty quickly whether or not it's something we can do. Now that's for an initial answer. If you want to get the full thing, then it's also going to depend on which kind of property type it is. But we will need, a full appraisal. We'll need clean title. We're going to need entity docs because we only lend to entities, not people, right? So if it's Chuck wanting a loan on his rental property, then Chuck needs to be incorporated, and we'll lend to Chuck's LLC and not to. So there's got to be an entity. So we need the legal docs on that. We'll need an ID.
Later, though.
Later.
For initial,
but that's for a full package.
Right.
If you want to send us a deal that can fund in 3 days, get everything together. I don't have the full list memorized off the top of my head, but that's pretty much it. We need title, appraisal, application, and the legal docs on the company, pictures, ID,
and
a
I
check.
want to. Can I interject
No.
something? Here.
No, I just want to talk.
It's my show too. It's my show too. There are different levels, and so we have an agent. If you're just a standard agent with us, just happy to get a name, email, and phone number, and we'll take over the file. That's also okay. Just put it into the system, and we'll take it from there. Tim is talking about more experienced brokers or people who are definitely hands-on, and that was when we would need the application, photos, and entity docs.
Good
and all
point,
of the
Rhoda.
other. Thank you. See, it's my show too.
All right. Okay.
Real fast.
Oh.
Are
All
there
of us,
any
chiming in.
specific ways to take those photos that you'd recommend? Like, can I take it up close? Should I have myself in it? Should I have my cat?
Yeah, definitely cats. No, I mean, I'm not
Or
going to spend a
Abigail.
lot. We have other trainings where we talk in more detail about the pictures, but in general, if you're going to take pictures of the property, pull out your phone, snap as many pictures as you want. We want big open pictures so we can see the whole picture. I don't need an upfront detailed picture of the floor, which we get, right? But so lots of pictures. The more you send us, the better, right? In general, we don't want to look at people in your pictures. Do you want to clean up the house? Sure, might make it easier for us to fund. If you don't have to clean it up, we see some ugly properties. So, okay, Rhoda, got a question for you. What are your minimum and maximum funding amounts? I have a nonprofit school. They're looking for a $13 million loan. And I got a guy looking for 25 grand for a fix and flip. So does that work?
Well, that depends. The minimum loan amount is $100,000 generally, and that also goes for the property. But again, the minimum and max is going to be heavily based on the LTV and the property. The maximum funding amount is $3 million.
With the
Million
3 million?
with an M, yeah.
Right. Okay, now we will consider loans over $3 million. We have a bunch of times. The reality is when you get outside our range, our underwriting is going to get stricter, right? We love being one of the most aggressive lenders in the country within our box. We'll look at stuff outside of the box, but it's going to get a little bit harder. Under $100,000, we have made some exceptions and done loans below that. I think we're funding a $70,000 loan this week. I'll be honest, we don't like them that much. We don't really want them. And
the pricing shows
the
that.
Pricing is not going to be great because we don't want it, right?
You've got to cover costs.
I'll be honest. We like doing loans at $250,000 and above. If you have a property that's worth $100,000, forget it. We don't even want to look at it. It's pointless to even look at it. Okay.
What if they have 8 properties worth $100,000 each?
8 properties worth $100,000, that works. But like literally yesterday, somebody submitted a client, 23 properties. We looked through the properties, about half of them were over $100,000 and half of them were under. We don't give any value to the properties that are under $100,000. So we would only use the ones that are above. Yes, it is what it is.
Okay, great. Do you, it's my turn, are you?
Oh, okay, go for it.
Do you lend on raw land?
It depends. Should we just start everything with it depends? I got 2 answers for you. We have our inside, internal, our money lending, and outside. Okay, so we have a lot of people that we work with. For internal, we do not do loans on raw land. We'll only consider the first 5 acres. There needs to be a building there, and really the value is going to be based on the building itself. So you've got this beautiful ranch house on 200 acres. We're really only doing the value based on the house and the acres right around it. We're going to more or less disregard the other acreages for value. So you're not going to be able to pull money out that way. That's for our internal lending, and that's just our lending charter. We don't have an option about that. But we do have partners that we work with. When you send us a deal like that, that we can send it out to those partners, we might be able to get you a good loan. I saw Rhoda get an amazing loan on raw land where a guy was able to get 500% loan to value, if you could believe it. The land was worth about $500 and you got $2.5 million on it, so it can happen, but it's not going to be internal, so it's going to be a little longer and we have a little less control over the process. Rhoda, what types of construction loans do you fund?
I am so happy I got this question because we don't really do construction loans. We can do holdbacks if they're doing some improvements on their current property, but ground up construction, it's
let's go through the different types. We have
bag.
fix and flip. Do we do internal lending for fix and flip?
No.
Definitely not. We have a fix and flip program working with other lenders, but for our internal lending, we're not doing fix and flip. So that's fix and flip. Ground up construction. We love that, right?
No.
No, okay. Ground up construction is super risky. We like risk when there's an existing property, but not on something that we might have to take it back and it's basically on the ground. What about a full rehab, like tear down and rebuild construction?
No.
Okay, well, I'm hearing a lot of no's here.
That's why I was not happy I got that question.
Let's say we got $1 million property and I got about $200,000 in improvements that I need to do, and I currently have, like a $250,000 first on it, so the money that I can pull out would cover the rehab. Can you do that?
Yes.
Yes, for sure, right? We actually just funded a loan.
For sure, guaranteed. Denzel
100%.
Washington, guaranteed.
I'm waiting for a wire to come in right now on a $1.5 million loan. We're doing a $385,000 construction holdback, so it should come in here any second, and we're going to hold that and give out tranches as the work is completed. Okay.
What are your standard rates and terms?
All right, this is an interesting question because unlike a lot of the lenders out there, we don't have standard rates and terms. We are a custom lender where we're going to look at every single deal individually on its own merit and do pricing based on risk. Now, the reality is the less risk there is, we'll get cheaper, but we're not going to probably be as cheap as the A-tier lenders. So again, we're not trying to be the #1 A-tier lender. We're trying to be the best D lender out there. So our rates are going to tend to be a little bit higher. I see a lot of deals at 12 to 18% interest rate. So 12 to 18 is where a lot of them are hitting. And origination points vary wildly. It could be anywhere from 4 to, I don't know, if it's a really small property, it might be a lot. So again, we'll work with you. We want to get a deal done, but the riskier the deal, the higher we need to do the pricing. We got a question from Mickey Mouse.
Well, it's a question and a statement.
You were going to do the questions in the Mickey Mouse voice. Darren promised. Okay, no, he's not going to do it. I'm just kidding. All right, go ahead.
Okay.
All right, limit. There it is.
I want to purchase a 300-acre tract. Okay, I apologize, Daryl. Daryl Eves asked this question. I want to purchase a 300-acre tract of land that is being sold for $500,000. What would I need to make this deal work? I want to develop a subdivision.
Okay, awesome question. Perfect, right? This is the kind of stuff we get all the time. So I'm going to repeat the question. He is looking to purchase 300 acres and build a whole development. This is land purchase and construction financing. That is not something we do with our internal money. Now, if he said, I've already bought the land, I've already got the entitlements done, I've already got roads paved, I've already got the plots laid, and I need some construction funding, we still don't really do that. All right, we are doing existing buildings. We want to pull money out of it, or he wants to buy the thing and he has half of the money up front. But raw land, sorry, that's not our bag. Our external lenders would love it. That sounds somewhat similar to with some of the deals that we've been able to get done with them, and you can get great terms. But my answer for internal lending is, let's say that project, he needed $5 million. I'm just randomly pulling something out. You need to come to us with a $10 million free and clear property that we would pull $5 million out of, and then you can use it for that. That's how we can do it internally. Otherwise, it's got to go outside. And what would that look like, Rhodes?
You would need 50% down on the land. You'd need a budget for the construction of the homes. You'd need an estimated, if you're going to pre-sell any of the homes, you'd need a budget or exit strategy, and you would also need experience in the industry. And what I've seen is you generally need, particularly for that type of deal, is a strong personal financial statement.
So you need a little bit of everything.
Yeah.
So that's not like what we do. We're like, we'll give you the money. Your property is there. You got a pulse, right? I mean, I think we check for pulse. But externally, ask for everything. Financials, track record, explanations, letters, you got it. But it can be done. It's just going to be a little bit harder. By the way, I just heard a bell. We ring a bell every time a loan funds. So that thing we were talking about waiting for the wire to come in, it has to be that. We just funded a $1.5 million loan. That was a difficult one to get done. I think we talked about it last week. At the last second, we sent it, the client signed the loan paperwork, then the title company said, wait, there's an $8 million lien, and then they wouldn't fund it. So it was, anyway, that's the kind of stuff we do.
Oh boy.
See, I told you, I promised you some Mickey. Okay, are you asking the next question? I'm getting lost.
Turn.
My turn, all right. Rhoda P, can my client, can my client get more than 12 months? You made an offer, 12 months interest only, or that's what you do. But I need 18 months or 2 years or 3 years. So what are my options?
Yeah, you can. For a small fee, we'll generally go out longer than 12 months. You can either pay a small fee or we'll look at it, just sharpen our pencils. Each deal is custom. So, we want to get the deal done. So we'll look at everything. But generally, our terms have to be 12 months, compelling circumstances, something like that. We can go longer, for sure.
Yeah, I think in the last 2 years, maybe 2 or 3% of the loans have been longer than 12 months. The longest one we've done is 36 months. But really, it's probably going to come in at a year, and then we can always extend it. If the borrower's a good borrower, then there's no reason we wouldn't want to extend it for another year. But it's just the way it works with our loan fund. We can't take on longer loans. But the good news is we can fund it, and we can fund it quickly, so it's worth it. I got another question from not Mickey.
Yep. All right. So, can you do investor fix and flips in Arizona?
Yes, but we're not going to do it with our own money. That's something we're doing. We have one close partner we work very closely with. It's not the kind of funding we're talking about right now, but we do deals in Arizona. We do. I said it. Deals in Arizona. Now, again,
Baby
if you
shark,
whoa, I don't know where that was coming from.
Oh no!
If you haven't,
no.
Just the funnest aunt.
But okay, the reason I say that is the normal fix and flip model is I'm going to buy a property. I want 90% financing on the. This is how our fix and flip program works. 90% financing for the acquisition cost, 90% of the construction. Internally, we don't do that. We could pull money out of another property. You could use it. I mean, we have another loan we're funding in Florida right now, where a woman is pulling money out of her main rental property. She's using that as the capital injection for subsequent fix and flip financing that we're doing with our close partner. So always a lot of answers, but internally, no, on the fix and flip. Externally, yes.
All right, so we have another question that came in from one of our favorite guys, JD.
JD.
Yep.
What's up?
I had a guy just today swear that bank loans on CRE is 4.5 to 5%. Is that right?
I'm sorry if that guy swore at you, but let me dig into that. What I think you just said was someone swore at him that bank loans on real estate projects are at 4.5 to 5.5%. Is that what you said? Okay. Yeah, banks do all sorts of stuff. I've seen banks do loans as low as 3%. We're not a bank. We're a private money lender. We lend to the people the banks turn down. Again, we're not trying to compete with the banks. So make sure to throw in there that I answered your question correctly. Now, I've seen Rhoda. That Colorado deal, what was the interest rate on that one? You remember that one? The 500% LTV I mentioned?
That one was, the rate
that was a non-bank lender also, right?
Right. The rate on paper is 12%, but they didn't charge interest on the money that wasn't out, so you had to take 50% out, and then they would only charge interest on money out. So I think the spread was 8%.
A little convoluted, right?
Right.
Here's the reality, guys. You only have so much time in your life. Funding bank deals sounds easy. You're offering these amazing terms, but they're going to run you through the ringer. It's going to suck the joy out of your life, and you don't have to make that much money. Really, that's our experience. We like our deals where you make a lot of money and help out people that aren't getting helped. It's not so competitive, so we're just not competing on bank paper. Speaking of which,
do you lend your own money?
Yeah, good question. All right, so
thanks.
the simple answer is yes, yes, and yes. Now, is it my money? I wish. We have a few large investors that we have very close relationships with that create our initial pool, and then after we fund the deal, we sell off the notes to our internal investors, either in American Mortgage Fund at earn11.com or direct note sales. So in that sense, there's a progress, but it's our money. We control the process 100%. Rhoda, I got a deal in fill in the blank. What states do you lend in?
All the states. That does not even, it depends.
The state of
Does
confusion?
it include the state of confusion?
Yeah, see, I knew. I tried to beat
I work
you to
with
the punch.
nerds. Feel sorry for me. It's nerds.
I prefer the term geek.
It's
I-
painful every day, but we lend in all the states.
All the states. Now, reality is some of the states are easier to lend in than others. Nevada, North Dakota, South Dakota, and a few other states are more difficult, and there are more criteria that you have. I'm not going to get into those.
But that 70,000 one was in North Dakota, wasn't it?
No, we did 2 loans in North Dakota in the last
See?
couple months,
All
not
the
the 70.
states.
But so we do. There are just more requirements in some of them, so they're not always the same slam dunk.
Could you do it in 3 days? Probably not.
Well, maybe if the criteria fits. That's the thing. It doesn't necessarily mean it means more time. It just means there's more rules that we have to abide by. All right, Mickey's back, or not Mickey.
All right, so Daryl wants to know, can you fund a rehab of a personal property? I have a client that just purchased a property that he wants to pull cash out to rehab it.
Great question. This is actually one of the questions you put in and took it out.
Yeah, I took it out.
All right. So yeah, one of the top 10 questions. Can you lend on...
Bonus question.
Typically what they say is, can you lend on an owner-occupied property or somebody's primary residence? And the answer is... drum roll.
If it's for a business purpose.
No. All right, we have 2 different answers here. Frankly, we can in some circumstances, but we really don't want to. It's really hard for us to sell those loans off, so we're probably not going to. The one caveat where we can do it is the loan that we do, at least 51% of the money needs to be for business purpose.
Like I said.
It starts to get real complicated. If it's a free and clear property and they're using the money for the business, then that's easy. But generally, let's say you got $1 million property with $400,000 first mortgage on there. Our max loan is going to be $600,000 probably. So you get $200,000 cash after you pay off that first mortgage. That 66% is going for personal use and 33% for business. That doesn't qualify. That's why I say it starts to get complicated. And I'll be honest, even at 51%, I don't like doing the owner-occupied properties. The laws are ridiculous, and I just don't like messing with them. So the answer is probably or very likely to be no.
But we'll look at it.
Yeah, I'll look at just about anything.
We'll look at it. He says
All right.
no, but I say yes.
Okay, well, send it to Rhoda because I don't want it. Rhoda, what are your FICO requirements?
Tim, we don't have them. We don't have them.
Come on, what do you mean you don't have 'em?
LTV requirements.
What if somebody has a 392 FICO? You wouldn't do that.
Yes.
Yes, we did.
Yes, we
Well,
did.
obviously, they've really had to work hard to get that number.
Yeah, it's an accomplishment, right? They're go-getters. If you got a 392, you've gone above and beyond. Anyway, so we really don't have FICO requirements.
Nope.
You don't even have to have a FICO. You can be from Tibet. As long as you own an investment property here, you don't live in it. It's not even, even a vacation property is semi-recognized as owner-occupied if you're staying there some. So as long as it's an investment property, We don't really care who you are. We'll look at it.
That was an interesting comparison. Have you been watching Iron Fist again?
No.
Again.
Again.
Never. Like I said, I work with nerds, geeks.
All right, so we're open for any more questions. While we're waiting to see if you have any more questions, I love the questions. Thank you for your involvement. Check back next week for Finance Agents Live episode 67.
67?
Where we're going to be talking about after the loan funds. I gave a little bit of a preview on what happens after loan funds as far as the investors. So after we fund a loan, there's a lot that goes on with those notes, right? They don't just sit there and gather dust. We're actively boarding, servicing the note. We might sell the notes. We have our investment fund. We've got a lot of different things. So check back next week. I'm going to be on here with David Krantz, and we're going to talk about all the cool stuff that we do after the loan, and knowledge is power.
Do you think your views will go down because I'm not on the show?
I can't imagine anybody's going to come back. If Rhoda's not going to be here, she's going to be
Spoiler
off
alert.
In Italy or Paris or...
Yeah.
Where are you going again?
All those
Where?
places.
Where?
No, Portugal.
Portugal. All right, close. Just
So-
Portugal.
We need to do this like after the final rose from The Bachelor. That would be absolutely hilarious.
Man, you're bringing in a lot of references today. I have literally never watched The Bachelor. There was a question, I think? I saw the
Yeah,
hand
there
go up.
was. Okay, so Stan Howard wants to know, can businesses get a loan for inventory? Say like for holiday inventory. I know this is not a real estate question, but can they?
Yes.
Sure. Yes, yes, and yes. Obviously not real estate related, although you can pull money out of your real estate to fund any business purpose. We have a number of ways that businesses can finance their inventory, anywhere from SBA loans, regular business term loans. We have 3-year business term loans. There are merchant cash advance and daily payment loans for people at higher risk. So in general, if you have an active business with cash flow, you can get money for your inventory. You can sometimes use equipment financing for some of these things. We have a lot of different options. We have a credit card program where you can get business credit cards and pull money out of that. We even have a program where you can get personal term loans if you have good credit and income for startups. So A to Z, yes, 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 and I think a yes. Right?
Yes.
All right. Anything else? That's it. I'm out of here. Thank you. See you next week. Don't forget to subscribe. Like the show if you like Rhoda. Try to ignore me. If you like Rhoda, like the show. Thank you. I'm out.